This month, Life Insurance Strategies Group is in Singapore, and here we're meeting with a number of reinsurance companies. Now, when it comes to life insurance, particularly if you're buying large amounts of life insurance, reinsurance plays a very important role. So let's take an example. Let's say you purchase a policy and there's $100 million of death benefit above the premium that you paid. So that's what they call a net amount at risk. So the pure death benefit purchase. So who's providing that $100 million? If you were to buy, say from a Prudential, a Mass Mutual, well, it's not going to be that carrier, that frontline writer that's providing all of that death benefit coverage. They're going to cede a lot of that risk to 1, 2, 3, maybe even more reinsurance companies. So for example, a carrier, the frontline writer might take, say, $40 million of death benefit risk and then cede the rest to reinsurance companies. They might do something like a share where the first 10 million they take themselves, the life insurance company, and then they share the next maybe 20 million, 50-50 with the reinsurance company, and then cede the rest to reinsurance. Now what this does for you as a client, it helps make sure that when you need the death benefit, that it's there, that you're not just relying upon that frontline life insurance company to provide that death benefit. So when we talk about reinsurance, how does that come about in the process? So a reinsurance company will look at the insurance company and say, okay, we trust you and your processes to bind our company to a certain amount of risk. So we will rely on you to do the underwriting, and you can bind us to say up to a certain number. So for instance, maybe it's $85 million. So the reinsurance company says, if you have a client and you want to provide them coverage up to $85 million, we won't be looking over your shoulder as you make that offer of insurance. However, if you get above that, that's where facultative underwriting comes into place. This is where the reinsurance company says, hey, wait a minute, now this is a lot of risk. We want to have a say in looking at that file. We want to assess that underwriting risk, and we'll make a decision. So obviously, when you're looking at life insurance, it's probably good practice that you try and keep the amount of insurance that you're purchasing from a carrier within that ability for the carrier to automatically bind the reinsurance company. It may be ancillary, but it's commonly known that a lot of the high-end brokers in the industry have good relationships with the underwriters at the major insurance companies. Those underwriters are familiar with those brokers' business. They have a lot of experience there, so it's not exactly like a faceless name, in another country providing the reinsurance. Having a reinsurer maybe sitting in Germany or Hong Kong, looking at that case and making a decision without maybe knowing all of the people involved. So at any time when there's a large policy written, you'll probably see that the broker says, hey, if it's more than a certain amount, let's buy policies from more than one insurance company so that we can keep the underwriting decision within that insurance company's or those insurance companies' ability to bind that coverage. Just good practice. So remember, when you're buying life insurance, and particularly large policies, you don't have to worry that you're putting all the risk with one carrier. They're reinsuring it. Now, there's a little bit more to this. Reinsurance companies actually reinsure themselves to retrocessionnaires, right? So retrocessionnaires are reinsurance companies for reinsurers. So that risk is spread even further. Now remember, at Life Insurance Strategies Group, we don't sell products, but we help our individual and institutional clients make decisions involving complex life insurance transactions. If we can help you, reach out to us at lifeinsurancestrategiesgroup.com.